Welcome to the B.F. Anderson Techno Fundamental Report for April the 11th. Inflation is the one form of taxation that can be imposed without legislation. Inflation is nothing more than a tax. When the government's running out of money, they print more money. Every economist knows that minimum wages either do nothing or cause inflation and unemployment. That is not a statement, it's a definition. Milton Friedman was probably one of the most sensible economists that I've ever experienced. He says here, just as an excessive increase in the quantity of money is the one and only important cause of inflation, so a reduction in the rate of monetary growth is the one and only cure for inflation. So anyway, it's a situation where inflation is a cycle. I don't really think there's a whole lot we can do about it. As long as we have to print money to cover our debts, we're going to be printing money and it's going to cause inflation. It's probably going to be with us for quite a while. This does somewhat remind me of the 1970s. So I really, thinking of the 70s, I think the best thing to do for the Federal Reserve is to stop, don't lower interest rates, just keep everything where it is. Everything seems to be okay. In fact, we got the producer price index this morning, and it was a little bit better than expected. We had the negative CPI yesterday. Anyway, I wanted to mention this. This is a report I saw. It says, reasons investors should stop watching financial news. Do you watch the financial news? I've had friends, colleagues, and even clients who spent hours a day tuning into CNBC or Fox News or Bloomberg to try to gain information that would help them with their investment strategies. Guess what? Not one of them became a better investor because of their viewing habits. In fact, watching too much financial news usually resulted in them becoming fearful, stressed, and either unable to make financial decisions or too quick to make ill-advised financial decisions. Simply put, watching financial news offered no benefits and a ton of drawbacks. I mentioned that over the Easter break, I read Livermore's book, and the main takeaway that I have from the book was that Livermore was very secretive, and he kept to himself. He was very opposed to tips. He says, few people ever make money on tips. Beware of inside information. If there was an easy money lying around, no one would be forcing it into your pocket. So basically, the problem with the financial media is that you're getting tips constantly. I mean, this guy will say buy, this guy will say sell, this guy says buy X, this guy says sell X. Your Uber driver can even be giving you tips, like a taxi cab driver. And this guy, Jim Cramer, well, you know how that goes, buy, hold, sell, whatever, with his kind of a clown type environment. So basically, what the point I'm making is that I really do believe I have to discipline myself very much to keep from getting too involved with the financial media, because I want to keep my mind clear. A lot of this stuff gets into your subconscious, and it can also affect your effectiveness. The Battle for Investment Survival, Gerald Loeb talks about all kinds of things in this book, but it's a great book. But one thing I wanted to point out was, he said, my feeling that an intelligent program aimed at doubling one's money might at least succeed in retaining one's capital or actually making a good profit with it. He makes a very important point that there's no shortcuts. You really have to have a certain kind of attitude here. So the biggest problem I have is that when I look at an individual stock, let's say like an Apple or Amazon or whatever, these companies are now $2-3 trillion. So the question I have to ask is, can this $3 trillion company become $6 trillion? Well, there's never been a $6 trillion company, but I really think size matters. I think this is a real argument for studying things like market capitalization. That's a very important number. Gold. There are some concerns out there. We're going to look at the charts here in a minute. It does look like we're in somewhat of a correction here. The market just does not like inflation, and neither does the bond market. Neither does really investment. But this is gold, and you can see here that the price of gold is actually moving up almost in parabolic fashion. Also, it was mentioned that Costco is selling a lot of gold. There's a big interest in gold here, and I hear all kind of stories about it's because of the Chinese or it's because of central banks or whatever. But the bottom line is the price of gold is skyrocketing and hitting new highs, and I do think it's somewhat of a warning. So let's get into the indexes. We talked last week about the break in this particular indicator. This is the NASDAQ. You can see here where we got the break, and then it's very subtle, but we almost got a violation on the NASDAQ yesterday. But in other words, we really need to see it move below this low to get the violation of the trend. Now, if we look at other indexes, you can see it a little bit clearer. Here's the mid cap. You can see here was the break again when it broke below that moving average. Now it's breaking below that low. So that's one index. So I'm going to move kind of quickly here. New York Stock Exchange, same thing. You've got a violation there. Now, this is very short term. I want to emphasize this is short term, but it is something to kind of get your attention and pay attention to. Now, the small caps, again, they're violating their trend. The small caps have just been moving sideways. Very frustrating for the small cap index. S&P 500. We did get the violation there. Now, I added another index, which is the equally weighted S&P, to kind of take out the big companies as leading things. But you can also see it's violating the uptrend as well. So I would say maybe a little caution would be advised here. Nothing too serious, but we're still bullish. You can see here that the primary trend continues to be up. We're above the 200-day. And we're in a nice uptrend here on the S&P, and we're also in a nice uptrend on the NASDAQ. We are seeing a little bit of a rollover here. Like I say, just kind of slow down a little bit here. Also, the price of oil is moving up, along with gold, copper, various commodities. But you can see here on the trend meter that we're back in the green on oil, and oil has been cruising back up. Who knows? It may go to 100. We're not sure. I did want to mention this bank stock. This is just to show you one reason buy and hold is such a difficult thing. This is a bank in New York Community Bank. They're having all kind of real estate loan problems. They got commercial buildings in New York that are selling on pennies on the dollar. Anyway, you can see what's happening to the stock. It's quite dramatic. So I think the regional banks, the small banks, continue to have problems. And here we go. This is the bond market. This is the TLT, which is the 20-year Treasury. You can see here breaking down on pretty heavy volume. So I'm just saying that the interest rate picture is looking somewhat negative. Now, I did want to mention NVIDIA because this is another kind of a worry that I have. It's somewhat kind of rolling over here. There was a tremendous amount of hype on this stock for the last year, really. You can see here it broke down below that upper moving average, and then it's violated, and it kind of rolling over here. You can see that the trend meter has moved from the green into the yellow, which is neutral. You can see that relative strength 1 is somewhat below the line, but relative strength 2 is holding. I'm not saying NVIDIA is having any kind of problems or the stock, but remember the stock is related to the company, but it's not the company. So all in all, I would just continue to be cautious here, kind of slow down a little bit. Let's see how this all shakes out. Thank you very much. Let me know if you have any questions.